Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with a December 17th stock market wrap up. Basically, today was a nothing day, as what we like to call an inside day. That's where today's range was basically held within the body of yesterday's price. And as you can see on the S&P 500, Dow Jones Industrial Average, and NASDAQ, basically, the price today stayed within the range of yesterday. So it was kind of a nothing day. It can be called bullish to some because we did not give back any of the gains that we got yesterday. And then bears also say, well, you bulls you couldn't figure out any follow through to it. But the truth of the matter is, from October 15th to December 17th now, the S&P 500 is only down 0.38%. So in 2 months, the index has gone nowhere. And from 1023 to 1217, the NASI is down 1.6%, so it's basically gone nowhere to slightly down. And from 1017 to 1217, the Dow Jones Industrial Average is down a whopping 0.3%. So in 2 months, the stock market has really gone nowhere. So all this bull bear case recently has kind of been silly because we're just in a range bound market. And until we can continue to move higher off the 50-day moving average or roll below it and break down to new lows below the November lows, there really isn't much hardcore bullish or bearish case to make. The good news to bulls is that volume was lower on the 500, Dow Jones Industrial Average by a lot, and also on the NASDAQ barely. But still, volume is still well below the 50-day volume average and not much is happening. I'm going to look at the S&P 600. Yeah, it was actually up a little bit today, and the Russell 2000 extending the gains, so looking good. Relative strength line down here showing some recent strength compared to price. Now, I want to go ahead and show you the volatility index, the VIX. As you can see, it's trending below the 50-day moving average. That's why we are looking like that we're going to have a Santa Claus rally. The VIXN is doing the same thing. So I believe we'll probably have a Santa Claus rally, but until the indexes are above the 50-200-day moving average, hot charts are setting up and breaking out everywhere, and stocks with strong fundamentals. And the stocks that I do go long don't reverse and fail like a couple have, AXYS, ISYS, and ASEI. Even how's that one even doing? I think I might have burned myself on it. Oh well, it's still basing out, so if it wants to work, I can get back in. So it just hasn't been a really smooth uptrending market or anything. What I want to look at now is show you the metals. Platinum, I told you as soon as it takes the 50, you can take a small long. Same with silver. As you can see, it continues to work out. Had you listened to that advice with silver, you now have 11% gain on margin. And of course, gold. As gold took it out 50 days, soon it wants to take out the 200. When it goes over the 200, you can add to your long. I'll be waiting for stocks to hopefully set up and break out before I go long. Let's look at oil. Oil today closed down at 45. I don't know. Why was I reading somewhere that it hit like 39? I'll have to check on this. I'm not sure what I'm looking at here. I don't know if it's at 40 or 45. TC shows 45, but I know I read somewhere that it hit its lowest level since 2004, so I might need to go dig deeper into that. And let's look at the CRB index to see if it's looking, oops, CRY. There we, you know what? Why can't I remember? Commodity index. Well, hold on. Sorry, everybody. I seem to have lost. Oh, man, come on. See, why did I forget what that symbol was? There, CRY0. Oh, there's no X. Okay, never mind. So the CRB index continues to be in a steady downtrend below the 50 and 200-day moving average. The worst thing that I got to show, well, let me go show you some other indexes also. HKHS.X should be the Hong Kong Hang Seng. Look at it. October lows, November lower lows, December uptrend took over the 50-day moving average and working higher. Let's look at KS11.X. That should be the Kospi index. Same thing, October, higher lows in November, uptrend. And then also China, obviously one of the better looking ones. And I know we don't have volume here, but the up days have had big, strong volume. So China's basing out, it looks like. And then the last one I think I want to show you is the Nikkei. And I think that's the Nikkei. Yeah, and it doesn't look nearly as good as you can tell to like the HKHS, Hong Kong index or the Chinese index. And of course, compare those index then to like the NYSE, which in November is hitting new lows, and you can see that the United States of America isn't the leader like it used to be. So let's keep that in mind. Let's see Taiwan, if I remember TWIIX. Yeah, see, that even looks better than the well, it looks about the same as NYSE. So basically, short-term uptrend, sub-intermediate term uptrend, intermediate term from May downtrend, long term from the October highs on the NYSE. We're down 44%. I was given an account in the middle of November. I'm down 13% in that account. The NYSE's down 41%, so I'm beating the market in my worst account. Best account I thought would be up under 20% after yesterday, but I was very blessed to not get filled on STRA, on ZECO, or IB. Neither one got filled, only on MB. So finally, luck was on my side, and a six-figure trade turned out to be a very small five-figure trade and a minor loss. So no harm, no foul. So I'll just continue to wait for things to set up and work out right. This is Joshua Hayes at BigWaveTrading.com. It's a short one tonight, folks, but nothing happened. We're going to have to wait for some more fireworks. Aloha.